Okay, picture this. There's this young kid, right, growing up in Nebraska,
Yeah.
and he buys his first six-pack of Coca-Cola.
Mm-hmm.
But here's the thing. He wasn't buying it to drink it. Nope. He bought it purely to resell it, make a little profit.
Already flipping things.
Exactly. That kid was Warren Buffett. And that little six-pack flip, that was really the tiny seed of, the capital allocation genius he became.
The first snowflake, maybe?
Yeah, the very first snowflake. So let's dive into this, because this isn't really just a story about, stacking billions.
No, not at all.
It's the origin story of the Oracle of Omaha.
Mhm.
And the real kicker, his biggest asset wasn't the money, it was his character.
His integrity, his approach.
Right. So today we're doing a deep dive into Alice Schroeder's big biography, The Snowball, Warren Buffett and the Business of Life. We want to pull out those really fascinating bits that show the formula behind it, all the wealth, sure, but also the wisdom, and honestly, his incredible patience.
That patience is key.
So, looking at those early days, what really gets me is just how young he was when this unique focus started.
It's almost hard to believe.
He was just a total numbers kid, obsessed with counting things, calculating odds, and money. The book says, 6 years old? Reselling gum and Coke?
6 years old,
Yeah.
and then buying his first stock at 11.
11. It just makes you wonder, what kind of kid does that? What was going on there?
Well, and I think what's often missed or maybe misunderstood is the why behind it. The book really makes it clear it wasn't simple greed driving him.
Okay, so what was it?
It seems it was more about curiosity and a real need for control. In a way, money became like a scoreboard for him.
A scoreboard. Interesting.
Yeah, a way to measure his skill, his mastery over risk and reward. And thinking of it that way, like a game or a puzzle, probably helped him stay detached from all the market noise later on. It gave him this kind of psychological edge,
That makes sense. Keeping score instead of just wanting stuff.
But, with that kind of numbers focus, how did he not just get bogged down in endless analysis, that paralysis you see sometimes?
Well, that's a great point, and it really leads us to the next big piece. His influences, specifically Benjamin Graham.
Right, the investing legend. The book calls meeting Graham his real turning point.
Absolutely. Graham is often called the father of value investing, and meeting him, studying under him, it completely reshaped Buffett's whole approach.
So what was Graham's core idea?
At its heart, it was pretty straightforward, though not easy to follow. Graham famously taught, and Buffett really took this to heart, buy stocks the way you'd buy groceries, not the way you'd buy perfume.
Okay, unpack that a bit. Groceries, not perfume.
It means focus on the tangible value, the underlying business, its assets, its earning power. Don't get distracted by market fads, flashy branding, or the scent of a popular stock.
So it's about substance over style. Exactly. Rigorous analysis. Looking for companies that the market was undervaluing, selling for less than their intrinsic value, their true economic worth. It's about finding those diamonds buried in the dirt, as Buffett might say.
And that creates a buffer, right? A safety net.
Precisely, a margin of safety. That was crucial for Graham. And it led directly to Buffett's famous mantra, be fearful when others are greedy, and greedy when others are fearful. Basically, swim against the emotional tide of the market.
It sounds so simple, yet so hard to actually do, especially now with everything moving so fast. Is that kind of patience still relevant?
Oh, I'd argue it's more relevant. Because it's rarer. Sticking to fundamentals when everyone else is chasing momentum takes discipline. And speaking of doing things differently, maybe the best example is Berkshire Hathaway itself.
Yes. The empire built on a mistake.
Pretty much. He often called buying Berkshire, this failing textile company, one of his biggest investment mistakes initially.
It's kind of amazing, buying into a dying industry. Why?
Well, the circumstances were complicated, but the result is what's fascinating. Instead of just admitting defeat and, selling it off for parts, he did something totally different.
He transformed it.
He completely transformed it. He used its cash flows, however meager, and eventually just used the company structure itself as his primary investment vehicle.
And look at it now. The companies under that umbrella.
Yeah.
Coca-Cola, Apple, Geico, Dairy Queen. It's incredible.
It really is. And notice the type of company. He wasn't chasing, the next hot tech startup back then.
Well, no, definitely not.
He focused on what he called boring but predictable businesses. Insurance, candy, furniture, utilities, companies with strong brands, loyal customers, what he termed economic moats.
Those durable competitive advantages.
Exactly. Things that protect their profits over the long haul. It all feeds back into that snowball idea, right? Finding wet snow good businesses and a long hill holding them patiently. slow, steady, strategic.
Turning that initial failure into this incredible platform. That adaptability is something else. But it does make you think, that level of intense focus on business, did it take a toll elsewhere in his life?
It seems it did. And the Snowball is quite candid about that. It doesn't just portray the genius investor. It shows the less perfect, more human side, too. Some real hidden storms.
Like what, specifically?
Well, the book delves quite deeply into his personal life, especially his very complicated relationship with his first wife, Susie.
Right. She seemed central to his life, didn't she?
Absolutely central. The emotional anchor, you could say. But the relationship was complex, and the book suggests it was also a source of some profound regrets for him later on.
That adds another dimension.
Yeah.
It's a reminder that success isn't always balanced, is it?
No, it rarely is. And Buffett himself was surprisingly open about this, at least later in life. There's a quote in the book where he says something like, "I was wired at birth to allocate capital, but I wasn't wired to understand emotion."
Wow. That's quite an admission.
It really is, very self-aware. And it prompts you to think, doesn't it, about the potential costs of that kind of singular focus, that hyper-specialization in any field. How do you balance intense drive with being human?
It definitely complicates the picture, makes it more three-dimensional. But, okay, beyond the billions and the personal complexities, the book really tries to distill some core life lessons from him. Let's maybe touch on those.
Sure, there are quite a few, but some stand out.
Okay, so the first one that really jumps out is reputation and trust. He hammers this point home again and again.
Takes a lifetime to build.
And a second to lose, exactly. He guards trust like it's, Fort Knox. Understands its value is way beyond dollars and cents. It feels like the bedrock of Berkshire.
Absolutely. It influences who he partners with, how they operate.
Then there's the second big one. Invest in yourself. He's famous for the amount he reads, right?
Still reads hours every day, apparently.
Yeah. He truly believes the best return you can possibly get is from learning, from reading, just constantly growing your own knowledge. It's an investment that compounds, just like money, maybe even more powerfully.
It's intellectual capital. It informs all those other decisions.
Totally. And this leads perfectly into the third lesson, which kind of brings it all together. Patience. Just monumental patience.
The long game. That Snowball didn't get huge overnight. It was decades.
Decades. And that's where his famous analogy comes in, right? The snowball itself.
Right. He said, life is like a snowball. The important thing is finding wet snow and a really long hill.
Such a great visual. The wet snow being the good investments or opportunities, and a long hill being time. Compounding.
Time, patience, letting compounding do its magic, not interrupting the process, whether it's with money or maybe other things too.
Yeah, that's what I was thinking. If we zoom out from just finance, how do these lessons, guarding your reputation, investing in yourself, having that long-term patience, how do they apply more broadly?
Well, think about almost anything you want to build. A career, a specific skill, even just a strong relationship.
Okay.
You don't get there instantly. You need that wet snow, the consistent effort, the small daily actions, learning, building trust. And you need the long hill, the commitment over time, weathering the ups and downs. It's the compounding effect of good habits and sound principles.
So trust with colleagues, building expertise, mutual respect, it all compounds.
Exactly, layer by layer, just like that snowball.
Reading The Snowball, you really get the sense that Buffett's story is, it's bigger than the billions. It really feels like it's about belief.
Belief in what specifically?
Belief in the long game. Belief in, doing the reading, doing the work. Belief in choosing integrity consistently over the quick win or the easy buck.
The process over the immediate outcome.
Yeah. And when you look at it that way, the real snowball isn't just the Berkshire stock price. It's the whole life he built, methodically, decision by decision, layer by layer.
That's a powerful way to frame it. Integrity and patience as the core ingredients.
So maybe that leaves us, and you listening, with a thought to chew on. What does wet snow and a really long hill look like in your life?
Good question.
And whether it's about personal growth or your career or maybe your relationships, how could applying those core Buffett principles, patience, learning, integrity, help you build your own kind of powerful, lasting snowball? Something to think about.